Why should you short the market? That's what I'm going to explain in today's video. So welcome back to the crypto trading channel, and if you enjoy it, smash the like button, and more importantly, you're going to make some money for yourself. So no reason to click off now. Let's just get straight into it. The main reason why you should be shorting the market right now is because the US 500, which represents the market as a whole, or the top 500 companies in the US, is about to break this downtrend line or correction pattern. So let me clarify right now. We have a downtrend line going on ever since the start of rate hikes that the Fed announced back in December of 2021. Since then, the market was dropping down, and obviously we all know what happened before that, where the market was clearly going up due to inflation caused by the COVID-19 pandemic. You know the drill: less production happening, more money pumped into the economy, and generally people just spending stimulus checks on stuff on the internet such as cryptocurrencies. So what is going on right now? Well, we had a huge liquidity grab, right? The market just basically went all the way up and grabbed some more liquidity for all of these big boys to start shorting the market at a better price. So let me just explain the concept of a liquidity grab to you. But before I do, make sure to leave a like and subscribe to the channel because it does mean a lot to me. Just go down there and press the damn button, okay? This is some good knowledge right here, if you agree. I think you agree. So a liquidity grab is when the price is, let's say, somewhere around here, and it is, very inevitable that the price will continue dropping down, right? Why is that? Well, because of rate hikes and because of monetary policy. It makes perfect sense that the market does make a retracement into the 61% fib levels, right? Which you can see right here when, obviously after the coronavirus pandemic, push the prices up, and then obviously we're going to make a retracement, and it makes sense to go down into the 50 or 61% level before prices keep going up. Now, since we have that in mind, and the fact that the Fed is increasing their rate hikes, and basically that means that the market should be going down and inflation should be fought. Now, some big players or institutions, they want to get a better price for their entries. So what do? They start buying, right? They make this big blue candle. Let me zoom in a little bit more. So they make this huge blue candle, right? Artificially. They spend a lot of money. They make some losses, right? But it incentivizes the market to think, wow, another bull run is happening. Let's get into it. So then all of us monkeys, all of these traders around the world, we start entering long, we start buying stuff in the market, and prices reach a very nice position right here, which is a very tempting position to short at because of this trend line, obviously. And then the institutions or the big boys, they just start shorting right here. So right now they effectively shorted at a much better price than if they just shorted the market right here. Now, in any case, they would probably have made a profit anyways shorting from this point, but they would have to eat a loss first and then go into profit, right? That's not very attractive, right? So what they do is they create this fake liquidity grab, push the price up, and then basically what happened right now, the price is just moving down, and there is two scenarios from this point. One of them is way more likely than the other. So the more likely scenario, and by the way, this goes for Bitcoin as well and all cryptocurrencies out there. Maybe not Ethereum because of the merge, but the merge is kind of useless, and I will talk about that in a second. But, if price breaks down, we are very likely to move into the 3.2K level. However, if the price does break towards the upside, which is very unlikely looking at the current position after the CPI news that actually came out yesterday or the day before, well, we're probably just going to keep moving down. What does that mean for Bitcoin, our favorite cryptocurrency out there? Well, Bitcoin is also forming a correction pattern, same as the US 500. And if you didn't see it, let me just draw it out for you. Even though it is not so perfect, this is a correction pattern, and the direction next is downwards. So when should you short the market? You should short the market as soon as the S&P 500 breaks through this level and closes strong on a daily candle, and I will be here to update you for it. So turn on the bell, subscribe to the channel, and be ready to short the market. Now, Bitcoin, on the other hand, the same stuff is basically going on, right? We have the same type of correction pattern, and the moment Bitcoin breaks down below this correction pattern, right, so somewhere around here, I'm gonna notify you and I'm gonna say short the market at this point. So turn on the bell, subscribe, and get ready for liftoff. Now, if you guys use TradingView yourselves, then it's even better. Then you can just monitor the market and short it yourself. But if you don't, and if you want some advice on when to do it, well, just stick around. So Ethereum, on the other hand, is making somewhat of a bullish move. Now, is this fake? Is this a fake bullish formation? We don't know yet because of the merge that is happening right now. So all of you know this merge was there to make Ethereum vastly more energy efficient. It transferred from a proof of work to a proof of stake type of network after years of development and delays. Now, one of these guys from CoinDesk or the Ethereum Foundation said that I like to think of it as kind of a switch from gasoline to electric, which is what it basically is, because Ethereum now consumes 99.9% or so less energy. Now, these developers from Ethereum say that the upgrade will make the network, housing a $60 billion ecosystem, more secure and more scalable at the same time. Now, when it comes to the chart, honestly, Ethereum shouldn't be moving bullish at this point, because this news is far away from making Ethereum's transaction times faster, for making the gas fees lower and stuff. That's going to come out in the future, but the market could be pricing it in, which is why we're creating somewhat of a nice bullish formation. So in the case that we do break out above this area when it comes to Ethereum, we may be moving more bullish, but only in the short term, because as Bitcoin and as the US 500 keep moving down, all altcoins will follow, and that includes Ethereum. So that's it for today's video. Make sure to subscribe, turn on the bell if you want to be notified exactly when Bitcoin makes a break towards the downside. By the way, the target is the 10K level, because that's the next zone of support that we have going on. And on the US 500, which you may or may not be playing with, it is also probably going to move towards the downside. So I'm going to notify you when it does break out down here, so you can potentially short the market. Now, that's it for today's video. Lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the crypto or blockchain world. And without further ado, I really hope to see you all in the next one.